And basically what NFTs is, it can store, it's proof of ownership. So it's proof that you own your car maybe, or you own your house, or you have this driver's license. It's all these different things, and it can be tracked on the blockchain. And you can track every single transaction it's had throughout its life.
If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called the Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below. Hey, how's it going, everybody? So today's guest is Anthony Fatseas, and Anthony is a fellow podcast host of the WTFinance Podcast, What the Finance. He's a podcaster, an investor, and an avid proponent of NFTs, which is something we're going to talk about today. His investing career began with a friend in college introducing him to cryptocurrencies during the height of the 2018 bear market. Unfortunately, this is where he lost 50% of his earnings, or just what he put into it, the day after he started investing in it. Since then, he's had a passion for investing and trading crypto, as well as Forex, commodities, and equities. I don't know how he got this passion for it when he lost half of it up front, but we'll get into that too. So this has culminated in Anthony pursuing a career in finance, currently working as an equity analyst. So over the past year, he's been an avid supporter of NFTs and the future they have. He believes that they're the next stage of the crypto revolution and could provide a great deal of value to multiple applications. Anthony, this is a pretty awesome background. I'm excited to talk to you about this stuff today. Thanks for joining me.
Thank you so much, Mike. Really appreciate it.
Yeah, absolutely. I gave like the small bits and pieces of your background, and we want to know a little bit more about you. So if you could share some more about yourself, what's your story? How did this start for you?
Yeah, definitely. So for me, basically how it started, I'm sure similar to a lot of people, you hear about crypto, you hear about investing and all these things, but it's just taking that plunge. And I know everyone has that. They might hear about it for 3, 6 months, a year, and then you just have to take that plunge. And for me, it was, as you mentioned there, meeting my friend in college. He literally introduced it to me, and I'd been looking at crypto, and obviously it was just after it hit, Bitcoin hit 20,000. We'd had the drop, and it was quite low. It was about $6,000 at the time. And he was, as you said there, he was just like, oh, come on, you got to get in, you got to buy it. It's really low at the moment. It's going to go up. 6,000 is a really good support. So I bought in. It dropped straight the next day, but I just loved it from there. It was just probably similar to yourself. It's just learning and finance, investing, and trading. There's so much you can learn. It's such a broad scope, and I've been hooked ever since, basically. So I changed my what I was doing at the university. I've pursued finance now and trading, and that's sort of the goals at the moment, to continue my career. I have the podcast as well, but yeah, I'm just looking to learn as much as I can, and I think NFTs will be a massive part of the future as well.
That's awesome. Okay, I have to ask you then, so before you switched what you were pursuing to finance, what were you trying to get your degree in prior to that?
Yeah, so it was just management. But for me, I had a background in entrepreneurship. So I was actually a salesperson in Australia. I don't know if you have them in America, but the charities is people trying to raise money. So I was standing in shopping centers, waving at people, trying to get them to come talk to me. And, the classic person, they're just avoiding, like trying to look away and not get the eye contact. So I was one of those people. And then I'd done that for 2 years. I had my own business. I was doing quite well. But I decided to get that traditional education to expand my knowledge. So I moved to the UK to study, and I met my friend. And then from there, I just completely pivoted because I just saw what was available in cryptocurrencies, but also finance as well. And that's really where my interest came. And I think a few of the things I've learned from sales has really helped me in my journey as well.
Right on. Yeah, we do have a lot of that here in America as well, especially where I live at in Hawaii in the tourism industry. Especially living here, whenever I go to Waikiki, it's crazy because you're just walking down the street and you have people chasing you down with pamphlets and flyers. I'm like, hey, man, I live here. I'm good. So it's pretty funny. But yeah, no, I totally get what you're saying. And that's got to be a difficult field to be in anyway, because you have to be able to handle because you get a lot of that. It definitely helps you with having a better attitude towards things, which kind of ties into what I want to ask you. And that is, okay, man, you invested in crypto back in 2018. The next day lost 50% of everything. And you said you got hooked. So how did losing half of what you put in get you hooked? Because man, I probably would have freaked out and said, I'm done. I'm out. So what made you keep going?
I think at the time, one thing that probably helped was I was obviously a college student. I didn't have much money, so it wasn't actually much to start with. So that may have helped me. If it was a little bit more, I may have been a bit more concerned. But as you mentioned there, sort of my sales experience, I just knew the importance of failure. And if you just keep failing, learning from those failures is vital. But from there, as you said, there was that massive drop. And the more research I did actually into cryptocurrencies and the technology behind it, not just the price, the more excited I got. And it's the same as if you look at a company that they say in the short term, it's a voting system, but in the long term, it's a value system. And that's the same for cryptocurrencies. You're looking for these cryptos that have that technology behind them, that have the support, that are going to progress in the long term. So that's what really attracted me to it. I was an avid supporter. As I said, I was hooked. I thought crypto was going to be the future. And they are doing quite well at the moment. But I do think there is still further potential for integration, which is why I'm quite excited about NFTs. I think that's the next step between cryptocurrencies and integrating it into finance in general.
All right. I love it. And that's actually what I want to get right into, because we're talking about crypto and we're talking about the next step. And probably the most that I know about NFTs is what it actually stands for, non-fungible tokens. Is it fungible or fungible? I don't even know if I'm saying it. That's about the extent of what I know. You know what I'm saying? Okay. So what are NFTs and why should we be paying attention to them?
Yeah, definitely. And I think the main thing is it's in the name. And you mentioned there non-fungible tokens. So for anyone who doesn't know, sort of what fungible means, it means that you can actually trade it for something else that's identical. So say the US dollar, you can trade one US dollar for another. They're all the same. It's the same. You can trade one Bitcoin for another. They're all the same. The difference when you come to the non-fungible token is that every single token is unique in their own way. And how that's done is there's a record on the blockchain, and it's basically evidence that you own this. It's almost like a certificate of authentication on if you have a memorabilia or something like that. That's what it's showing you. So say if you own, you can prove it through the blockchain, and that's like the classic. You've probably heard it. So at the moment, it's quite popular with art. Lots of people are making quite a lot of money from CryptoPunks and all these different things. And you hear the classic analogy saying, "Oh, I'll just copy it and put it into my documents, and now I own your NFT." But it's really not the same thing. It's because you don't actually have that proof of ownership, which is quite vital. That's where it integrates into blockchain. There's the proof that you own this piece of art, or it could be multiple different things. So that's the exciting part. And I think it's not just exciting about the art, it's when you expand it to other different platforms. And there was a massive blockchain focus a few years ago where everyone's saying a supply chain will go on blockchain. Basically, real estate will go on property on blockchain. Deeds will go on blockchain. I think NFTs is where this will really happen. So that's actually next step to actually integrate it into everything.
Now, talking about blockchain and NFTs, so like that's pretty much the receipt, right? That's the proof of, hey, it's yours. Same thing with crypto, like crypto's traced on the blockchain, and that's what keeps it, I guess, the specific rarity of a specific crypto, right? Because you can only make so much on the blockchain. And that's about the most I really know about crypto as well. Like I have some crypto, not much, but it's just something I kind of dabble in, but don't, because I don't know too much about it. And I've been talking with some more guests recently about it, learning a little bit more. But now NFTs, looking at this, so you're saying it could be more than just a piece of art. Now I saw like Jack Dorsey's first tweet went out as an NFT, the screenshot of that or whatever became an NFT. So what else can you have as an NFT besides artwork?
Yeah, I think if you look back at crypto, it started as a financial asset, and now you have smart contracts and integrated and all these different things. And basically what NFTs is, it can store, it's proof of ownership. So it's proof that you own your car maybe, or you own your house, or you have this driver's license. It's all these different things, and it can be tracked on the blockchain. You can track every single transaction it's had throughout its life. So let's say the government in the US, they transfer the NFT for your driver's license to your wallet. There's proof that they've done that, and there's proof that it's yours as well. And I think this could be implemented in stocks. So let's say that at the moment, obviously the stock market closes during the night. It closes on the weekends, mainly because there's issues with actually the transfer of the ownership of the stocks. It can take a day or two behind the scenes, even though we don't always see that. But with NFTs, it could be, let's say each stock is an NFT. It could be instantaneously transferred on the blockchain. So I think that's what it will really, each NFT will represent these different assets. It could be a stock, it could be a house, it could be a company, it could be anything. And what I will say as well is that, NFTs aren't all the same. So obviously they can be hosted on different chains. So I'm not sure how much you know about that, but obviously there's Ethereum, Solana, there's all these different cryptos. They all have their own different blockchains. So these different services, these NFTs can be hosted on these different services. And each of them have their sort of own benefits. Ethereum's obviously has the largest market at the moment and it's most well known, but it has quite high fees. So if you want to make a transaction, it can be $50 to $100 sometimes. Whereas Solana and a few of the other ones are a bit smaller, but they have very low fees. But then people are worried about the security of them as well. So there's the advantages and disadvantages. But then I could also see that those are decentralized platforms. I could see centralized, so maybe the US government or sort of companies actually building their own blockchain, having NFTs and running it from there as well. So that's another potential avenue.
Okay, so speaking of NFTs and the blockchain, so what is like the technical aspect of this? How are NFTs connected to the blockchain? Is it similar to the way cryptocurrencies are? Is it the exact same thing, or like how does that work?
Yes, I'm not too sure about the actual intricacies of it, but what I would say is if we look at a picture, the picture's not actually stored on the blockchain. And that's something that I found quite interesting. So there's something, it's the metadata is stored on oftentimes AWS or, on Amazon. And then from there, that metadata is transferred to your wallet because there's proof that you actually own this NFT. So basically, as I said before, it's mainly just a proof of ownership. And then from there, the outside platforms connect to that proof of ownership. And then it's to do with the smart contracts involved. And it's different between each blockchain on how it works. But yeah, that's really how it works. It's quite interesting. And I was quite surprised, but I guess that makes sense because if there's these pictures, thousands or millions of pictures on the chains, it would slow it down massively and become quite convoluted.
Yeah, for sure. It's definitely a learning process for somebody that doesn't know too much about NFTs or blockchain or crypto for that matter, like me. So I hope I'm not bugging you with too many questions, but I definitely have a lot of questions. One of the beautiful things about hosting a podcast is I get to be a little bit selfish about that. And I get to ask you the questions I want to ask you and learn, right? And at the same time, hopefully provide some type of content value to my listeners that they're able to learn from this as well. Okay. People listening probably want to know something like, what are the risks that might be involved with buying an NFT and how can you buy them?
Yeah, definitely. There's multiple ways that you can buy them, and it can be quite complex. So if you're not actually involved in cryptocurrencies, it can be quite complex because what you have to do is you have to say you can go into Coinbase, buy $100 worth Ethereum. From there, you'd actually have to create a wallet, which is a common one called MetaMask. And it's quite easy to make. You go to metamask.com. Oh, I'm not sure the exact website of MetaMask. You can Google that and it'll come up. And then from there, you transfer your money, your crypto from Coinbase to the MetaMask. And then from there, you'd have to go onto a marketplace. So OpenSea is the most popular at the moment. And then you could, buy NFTs from there. So that's one way of doing it. And obviously that will change depending on what chain you're on. So each chains have their own actual wallet. So then from there, and then they'd have their own marketplace as well. So it can be a little bit complex in that regard.
Can I jump in on that real quick? Because I have a question just to make sure I'm understanding this. So are you transferring your crypto from your wallet to MetaMask? Is MetaMask like the marketplace? So like now it's, I guess maybe like uploading credits, right? Like you upload your credits to the marketplace. And then from there, this is what you have to work with. Almost like uploading like a gift card to Amazon. Like you upload it and this is what you have essentially to work with. Or is it still tied to your wallet then? Or am I even thinking about this the right way? Is it still in your wallet? Like, how does that work?
No. So let's say it's like transferring from one bank account to another. So let's say Coinbase is sort of like one bank account where you buy in, and then the MetaMask is like another bank account, and that can actually connect directly to these marketplaces.
Okay, got it.
But I know, and that's one thing that I think is a major issue for sort of adoption, that it can, for me, and I think I'm quite tech savvy, and I was quite interested in all this stuff, and I've been involved in gaming and all that stuff. But I found it quite difficult to start with, even just buying crypto, let alone going from there. So I think that is maybe a risk involved where it can be hard for early adopters. But there are sort of other platforms that you can use where you can actually just connect your credit card. I know there's one called Rally. I don't know if you heard of it, rallyroad.com. Oh, man, you will love this. So it's actually like a way where you can buy fractionalized NFTs, but also fractionalized memorabilia. So they have some cool stuff. They have like old cars. They have Michael Jordan jerseys. They have just basically like artifacts and these amazing things. And you can just buy $5, $10, $50 worth.
I'd jump all over that. I'll have to check it out for sure.
Yeah, definitely. And I think that might be a way to get into it if you're not crypto savvy. But then obviously there's a risk involved that you're actually owning it. It's a contract. And unfortunately, I don't have access to it because I'm in the UK. But it's something that it is quite exciting. But for people who are looking to go through the crypto route, you'd first go, buy a crypto and transfer it to a wallet that can connect to the marketplace and go from there.
Okay, right on. For those that are listening, and also for myself, that might not know certain like terms when it comes to talking about crypto and blockchain and NFTs, what's some key terminology that we should know for somebody that's going to go and maybe from here they go listen to your podcast or they go find something on YouTube to watch and they're trying to learn about crypto, but they don't really know the lingo. So what's some stuff that we should know?
Yeah, definitely. So I'd say that a cryptocurrency obviously it's all the different currencies that you can buy. That's the first one to start with. Blockchain is actually a technology involved. So the blockchain is like the base layer. You could say it's like the financial system. And then the cryptocurrencies is like the currencies that we use. From there as well, there's the different wallets, as I was saying, and they're like bank accounts. So you can actually transfer your crypto between each bank account. I would be careful as well because it's not like normal banks where if you transfer it, there's no way of getting it back. It's lost forever. You have to transfer the right crypto to the right wallet as well, which can be quite confusing. From there, there's Bitcoin, which is obviously the largest cryptocurrency at the moment. And there's altcoins, which is basically any other coin. And they're called altcoins because they're smaller. At the moment, Bitcoin has about 40% of the actual whole market cap of cryptocurrencies. So those are a few terms. And yeah, it's quite hard because then from there it goes very niche depending on each crypto and how it works. But yeah, I'd say those are the main things to start with. As I mentioned there, Coinbase is quite a good broker. Binance is quite a good broker, Bittrex as well. So these are all places that you can buy. I think the Cash App in the US is quite good, maybe for people who are looking just for easy access to crypto.
Yeah, that's good to know some of the different things that, at least to be able to speak the language a little bit better as you're talking and learning about crypto. So that's fantastic. I know what altcoins are because like the crypto I have is an altcoin. I have an altcoin that I get from actually not hosting, but I have my podcast on this site called Oriel. And on there, they actually rank podcasts like you get voted for. And my podcast is actually trending in one of the top business category podcasts on there. So as people vote, I get paid with this crypto, this Hive coin, and it's has a decent value to the point where I've got about a couple $100 worth of this crypto just for hosting my podcast here, which is fantastic. So if I ever want to cash it out, I can cash it out and there you go. But I'm just letting it sit in the wallet and do its thing because I still have no idea what to do with it, but it's just pretty cool. But so speaking of that, the value of crypto, let's talk about the value of NFTs. So I get it. Like you're essentially buying like the rights to a specific piece of artwork or something like that. The blockchain shows that you own it. It's that certificate of authenticity, like you said. So is it really worth anything? Because like you said earlier, somebody could just copy that picture and save it on their computer and say, I have it now. You have a copy of it. You don't have the actual original. So how does that work? Like, how does it prove value?
Yeah, and there are sort of different NFTs. I will say there are the arts, and at the moment there's also utility tokens, and they're more focused on, say, there's some games that people are bringing out where the NFT will actually be, it could be a sword in a game, it could be maybe like a Pokemon in a game or like a character in a game. So there are those sort of more utility-based NFTs, which might have, it's sort of hard to quantify their value. But if we just look at art specifically, which is the most common one at the moment and has been how NFTs came to be, I'd really compare it to memorabilia. It's really based on the market, and it is very illiquid market. It gets to the point if no one wants to buy it, it's basically not worth anything. It's only worth how much someone's willing to buy it, which can be an issue, especially if you're going into a project which might not have a lot of hype. There might not be a lot of people interested in it. From there, it is very hard to actually sell an NFT if you want to cash out. Like if the program dies, if like a crypto dies, it's very hard to sell out. No one's really going to want to buy it, and you take massive losses. So that's what I would say. It is it's a very illiquid market, and there are massive risks involved with actually investing in NFTs.
Yeah, but I would argue that, excuse me, I would argue that there's massive risk in anything that you invest in. The value of essentially anything is what we believe that value to be. Like when you look at typical stocks in the stock market, right? The values of certain stocks are all based on, there's different, of course, there's key points, there's data that all plays into it, but it's all about everyone's faith in that particular stock or just in the market itself. And that's what drives it. Same thing with real estate. You look at real estate, and you got supply and demand. We have a housing shortage right now. So you see the values skyrocketing. And why are the values skyrocketing? Yeah, sure, that's because there's a shortage, but now people want to get in, and it's scarce, right? It's a scarce asset right now. So the value goes up because we drive that up ourselves with that type of, thinking, that type of mindset. So I would argue that you could say that NFTs could be treated the same exact way. And it's pretty neat because one of the things that I see happening right now, and they're talking about it now with Facebook changing its name to Meta and all of that, and you have this whole metaverse thing going on, that you're starting to see there's a couple games and other things that have online real estate where you can make these purchases in online real estate. And I saw some people talking about this recently about how there's some significant value in that. And you actually see actual large companies now buying up this digital real estate to essentially get in early because they think it's the next up and coming thing. So I definitely think you're onto something with that, with talking about this and looking at what is that next level. But before we get into that, I know that there were certain things that I thought about when it came to crypto and NFTs and everything that might not necessarily be true. And there's a lot of people out there that probably are still thinking, like, even after listening to you for a few minutes, and they're like, I'm still not sure about this stuff, man. And whatever. What are some common misconceptions that you hear that's just around the watermill about NFTs?
Yeah, definitely. I might add something to the first point you mentioned about the markets and how it's all basically based on what we value them. And you could say that we've seen that in China as well with Evergrande, and how they've been hoarding these properties, and now that they've sold them, the sort of market's collapsed. And you could say in the US, you'll mention real estate. I'm sure a lot about this with BlackRock, how and all these investment companies are buying up all this property, and then from there they're inflating it. So yeah, it is similar. And I guess you could say in the stock markets, you have the big institutions. In NFTs, you have whales basically, and they're basically the same thing. Whales, there's these people or institutions with lots of money that come in. They might buy up the NFTs, and then from there the price will increase because there's obviously less supply, and if the price has gone up, that increases demand. So it is quite similar in that regard, and I think it's human nature and supply and demand and how that works. But looking at misconceptions in crypto, I think one thing, and I'm not sure if something that you've thought about and maybe some of your listeners have thought about, is that a lot of people use it at doing illegal things and maybe shady things. And I think that's a massive misconception that people have. And there was an analysis that can
actually, as you're saying that, because I remember like when they first started talking about Bitcoin, like the big thing was, that's what they use on the black market or the dark web. It's not traceable. And a lot of people freaked out about that because of, some of the practices that it was actually being used for. But, the thing is, like, the same thing was happening before. It was just with cash. Non-traceable dollars, not electronic transactions. It was just cash. It's another form of currency. So I don't really think about it too much like that, because really that stuff's going to happen regardless. It's just a matter of what currency they decide to use,
Yeah, and I definitely agree. And I think there was a study recently that said it's less than 5%, or I think it was quite a lot less than 5% of the actual transactions were potentially laundering or any of that other nefarious stuff. But yeah, I think there was I think it was Silk Road a few years ago was the black market where people could buy drugs, and it was using Bitcoin, and that's sort of what gave it a shady past potentially. But yeah, that's a misconception that I have. Another one is that it is extremely risky. And while it is, I think it's something that if you look at any asset, if you look at the stock market or any other asset, in its first 10 years or in its first however long, it's extremely volatile. And I think that's something that people fail to understand, that just how volatile these things are, because they're new and because there isn't that volume involved in the actual market. Now at the moment, there's over $1 trillion of actual money in these cryptocurrencies. So the volatility is still there, and it's probably more than stocks and say the S&P 500 and all these other markets. It is reducing, and I think it will get to the point, the longer the market's open, the more money that's in there, the less volatile it will become. And another thing is that it's not correlated to the stock market. I don't know, have you heard that it goes the opposite to the stock market?
It's its own entity. It's not, I could see where it's not tied to the stock market at all.
Yeah, definitely. But it's surprisingly, it is. And that's something that I think a lot of people are surprised about, because if you look at COVID-19, we saw the massive crash in US equities and other equities. It was the exact same for Bitcoin, and actually hit the low of, I think, 3,000 or something like that. And if you have a chart side by side, and because there's futures as well for Bitcoin that can be traded on the CME, they're quite similar. And I think that's one thing that I would say, that there is still correlation. A lot of the reason, there's quite a few large institutions that are investing a lot of money into these cryptocurrencies. So that's one thing I would say as well. Price action on the weekends. I don't know, have you heard this? It's maybe not a misconception, but normally the moves on the weekends that occur, they don't normally turn into a trend, because it's quite low volume, because the institutions aren't trading. So that's another thing that I found quite interesting.
Yeah, definitely interesting. I thought crypto and the market were not tied to each other at all, but putting it that way, I'd have to see what that looks like, putting like a side-by-side chart. But ever since Bitcoin's been put or publicly traded on the market, you can see the trend. Like, it still goes the same way when there's some type of economic crisis or something like that. And you see that with most assets, except for whatever reason, everything else crashed this time except for real estate. And real estate went the opposite direction and shot up. And again, because it became that whole scarcity mindset. And a lot of people were pulling out of the stock market. And I guess even some people were pulling out of crypto to jump into real estate, because they felt like, hey, if I don't get it now, I'm never going to get it.
Yeah, but I think as well, it was so short. If you think of the crash, it was only 3 or 4 weeks of actual crash until the Fed they said, okay, we're going to pump all this money in. And I think that probably helped real estate, because real estate, if you think about it takes at least a month or two if you wanted to flip something, or a few months. So the fact that they put the bottom in from there, and I'm sure you're more about this than me, sorry. I don't know.
Oh, no, it's fine, man. But the thing is, it's this recovery and then surplus, I guess you could really say, right? Because not only did we recover from that huge crash that happened back in 2020, but we've surpassed where we were back then, and then some. And if you look at the trends, just the market trends, you just look all the way back and look at the charts, and you'll see it going up and up, and then a drop, and then up and up, and then a drop, and then up and up, and then a drop. It's a common thing. If you rely on it, it's going to constantly go up. And if crypto's the same way, it's probably a lot safer to invest in crypto than people think it is. But at the same time, you have to invest in the right crypto assets, right? Not just like any old altcoin that somebody makes. I don't think I would ever invest in like Booty Coin or whatever some of these crazy names are that come out. It's just, it is what it is. Or like Dogecoin, like I didn't jump on that trend. I know people that did and made a lot of money because they jumped in while it was getting pumped. And I know other people that jumped in after it was pumped up to 60 cents. And I was like, you're making a big mistake. And I was like, I don't know too much about crypto, but I'm telling you right now, I don't think it's a good idea. And then they lost a lot of money when it dropped back down. So it's, again, you can say the same thing about penny stocks. Same thing happens there. You jump in on a penny stock because you think it's going to shoot to the moon, and then it doesn't do anything. Or you pick one and it does really well. But right now it's 95% of penny stocks fail. And it's probably the same percentage of altcoins on the crypto market as well. Again, I don't know too much about it, which is why I'm talking to somebody like you. This is your focus, which is awesome, man. Because one of the things we talk about on this podcast is building your wealth, right? It doesn't necessarily have to be through real estate or the stock market. There's so many different things you can do. You can invest in businesses, right? There's so many different things. But the main thing is what we talk about is beating your debt, building your wealth, and controlling your future. And the best way to do that is to be armed with as much information as possible. And that's why I say education is so important, and why I have this podcast to provide this service to help people learn and understand some of these different things, especially the things that I don't understand too much about, which is really cool. All right. Speaking of NFTs and going towards the future. So I was talking about how the stock market, you see it go up and then you see the dip, and you see it go up and then it dips. So what do you think the actual NFT market, what's this look like in the future? Where do you think this is going?
Yeah, definitely. And it is quite interesting. I see, because at the moment, if you look at the issues that the NFTs have, is there's a very high barrier to entry. Not only is it's quite complex, so I mentioned it to you before, and that's, I didn't make it sound easy, and that was trying to make it as simple as possible. But not only that, if you look at let's say the blue chip projects that they call them, sort of similar to stocks, They're extremely expensive. So let's say for CryptoPunks, there's the Gary V has his own NFT, the Bored Ape Yacht Club, all those ones that are well known to be quite expensive, hundreds of thousands of dollars. If you want to invest in Apple or the best companies it's possible because of fractionalization shares. You don't even have to buy a whole share. So the way I see NFTs is being a similar, that's the future, I think, if you wanted to invest in it, where rather than buying the whole thing and having to put hundreds of thousands of dollars up down, you could buy a share. It was what I was talking before about Rally Road, which is a platform that's available for that. But I think that's the future of NFTs and how, ordinary people like ourselves can invest in them, because there's no way for me that I could actually ever buy one of those. And you have to there are a few projects which are possible and you can do your own research, and it is possible, but there's obviously that, there's luck as well involved. It's similar to finding an altcoin that pumps up. There is that little tiny bit of luck, no matter how much research you do. You just need that. It's the same with stocks, it's the same with everything, the timing. So that's where I see it going fractionalized. I could also see real estate going fractionalized as well. So for people who are struggling to actually get on the property ladder, you could split it up between 100 people. And then I know some companies do that.
Oh yeah, that's a big thing. That's how I invest in multifamily real estate right now. Like I'm in a syndication deal. I partnered up with some people and got a 102 unit apartment building. I couldn't take that down by myself. So it's definitely like that's definitely something that's already available in real estate right now. It's kind of like fractional shares, but it's a bunch of people partner up to raise the capital to buy these assets.
Can you sell like your share?
No, I can't. So I can't sell it right now. It all depends on who your operators are and who you're with. There's some companies like I know, like if you invest in like a real estate investment trust on the stock market, like a publicly traded one, buy and sell as you want with those. And it's very similar, but you don't get like the tax benefits of owning real estate. Whereas if you're in a syndication deal, you're going to get some of those tax benefits because you actually own part of that asset. But the thing is, everybody that's involved, they all own it. And it's the operators. They're the ones who make the votes and make it happen and say, okay, hey, now's the time that we're going to sell. And usually you'll see people, they'll buy these assets, hold them for 3 to 5 years, turn around and sell it. And then the profits get split amongst all the owners and partners, right? So it's pretty nice. I get distribution. So I get paid monthly based off of the people paying their rent and everything. So I get my cut of that, which is really cool. And for me, it's one of those things where I can invest and I just build like this passive cash flow and I don't have to worry about it. And that's what I like about it. And then when the asset sells a few years later, I take the profits from that and turn it back around and go into another one. So that's one of the things that for me, it's a comfort level thing. So I know that I'm going to be getting returns on my investment. But I can definitely see something like that in the future too for NFTs, especially like with what I was mentioning earlier. I see a lot of people talking about this digital real estate and different things like that. I could see some of the bigger pieces of digital real estate where that's going to be an option in the future as well, where you can buy like these, I guess, fractional pieces of NFT. That's probably something that we'll see in the future, which is really neat because I think we're going to start to see a lot of the stuff that you can buy as a real asset in the real world start to trade similarly in the digital world. And that's just where we're heading. But that's what the future is. And as much as people want to try to say, oh, no, that's not for me, I'm not going to be part of Skynet or whatever. Hey, that's what the future is. I mean, look at all the sci-fi shows now that are coming to life. It's crazy. Like we never thought we would have touchscreen phones like this. It's absolutely insane that I have something even more powerful than my computer that I keep in the palm of my hand. It's absolutely insane. But that's the world. You have to evolve and you have to keep moving with it. Otherwise, you get left behind. So that's why stuff like this is very interesting to me and very interesting to my listeners because they want to continue moving and evolving in life and growing. So this is just another way to do that. So that's why I'm very appreciative for you to talk to me about this stuff. So, all right, I've rambled on long enough about this. But okay, so you're big into crypto and now you're in NFTs and everything. We talked about what we think like the future of that looks like. You've been in this now for, I guess, like 3 years now, right? Going on maybe 4 years as we come up here to 2022. What is something that you've learned over the course of investing in crypto and NFTs that you wish you would have known when you first started and lost half of your money?
Wow, that's a big question. I think the main thing is look at the horizon. And I think probably for a lot of people, when we first start out, we're like, oh, I want to be a millionaire straight away. I want to be rich. I want to get in GameStop or AMC or one of these altcoins and just flip it and retire straight away. But I think sometimes it's the boring plays. Sometimes they're the best plays. And it's just looking at the horizon. As you said, technology is the future. And if you look at I saw a statistic recently where I think the NASDAQ, if you take out the 5 massive technology companies, it's actually a negative at the moment. So it's literally the future. It's carrying the markets, it's carrying the economy, it's technology. And if you don't want to embrace it, that's okay. But just have an understanding of it and look at the future and where you think things will go, and look for companies, look for NFTs, look for things in the metaverse. And I think that's something that we could talk about further that I didn't talk about before, about the future and the metaverse and where that could go. But yeah, that's probably what the advice I give myself. Don't be so short-sighted. Look further in front.
Yeah, that's very fair. That's very fair for sure. Okay, so now I have to ask you, do you have a favorite business investing, real estate, or crypto related book or podcast besides your own that you'd like to share with us today?
Let me have a think. I'll give you a book, and it's one that sort of, it might not be investment as such, it's more statistics, but it's from someone called Nassim Taleb. I'm not sure if you heard of him. And it's a book called Anti-Fragile. And it's statistically looking at the stock market. He was an options trader. He made a lot of money. He wrote a book called Black Swan as well. And it's looking at those Black Swan events. And basically what you're trying to do is, if you think it's something that's fragile, it breaks. But if you think it's something that's anti-fragile, if put on it, it actually gets stronger and it becomes better. So he talks about actually building a system in place where if it goes against you, you have very small downside, but if it goes for you, you have massive upside. And his book, Anti-Fragile, it's influenced me quite a lot in terms of, and if you look at Bitcoin and all these things, and crypto, and NFTs, that's what they are. If you're putting a small percentage of your portfolio into them, say less than 5%, many of these have gone up 100 times. What's the downside? If it goes down 50%, you've lost 2.5% of your portfolio or whatever you've invested. But if it goes up to those levels over the past year and a bit, it's gone up 20 times. So if it goes up that level, then that's massive. And I think that's one thing for me, is trying to minimize the downside and maximize the upside. And that's someone that I really enjoy his books, and I think he's written 5 of them as well, around that notion of statistics and how that works. I'm not sure if have you heard of.
So I've heard of Black Swan, but I've not heard of Anti-Fragile. So I'm definitely going to check that one out. That definitely sounds very interesting. Sounds more to help you adjust your mindset when it comes to those kinds of things. And that's one of the things that I find about most of the people that I talk to on this show that have a business or a podcast or anything like that, and just investing in general, is like one of the biggest things is just having the right mindset when you're looking towards this stuff. So this looks like it would be a good book to help people with that for sure.
Yeah, and I think it's something that it's not just focused on investing. It's literally can apply to anything in life. And he does talk about financial systems, but your governmental systems and all these things, and the importance of volatility as well. Like sometimes we want the stock market to go up all the time, but if that happens, then you're going to have a massive drop. You actually want that volatility up and down, and it makes things more stable. And that's the same for crypto. It can't go up forever. It's the same for NFTs. If it goes, the higher it goes up, or the quicker it goes up, the quicker it will come down. And I think that's the thing, that healthy markets has those ups and downs.
Oh yeah, it's the law of physics too. It's gravity. What goes up must come down. Unless you make it to space, then you can beat that. But I guess that's why everybody's talking about you got to take it to the moon. I guess that's why that's the next big thing, because it's not coming back down once it hits the moon.
I'm looking forward to the average Joe spaceship maybe in the future.
Give me 5 more years. No, I'm kidding. Definitely. No, awesome, man. That is not an aspiration of mine. I don't think we'll quite see that. Maybe I'll get like one of those VR headsets and do it that way. And that's how I'll take my trip to the moon, unless I can get an invite on someone else's rocket ship. But I don't have any aspiration to do that myself. Definitely interested in space travel because I'm a big sci-fi nerd. I'm pretty sure you already saw like my Star Wars tattoos on my arm. Yeah. But anyway, this has been a very interesting conversation. I really feel like I learned a lot. I got some great notes here, got some stuff I want to look up and look a little more into. But speaking of that, because of the stuff we talked about and how interesting it is, and just learning about this NFTs as an asset class, my listeners are going to be like, hey, we really like what Anthony's talking about. I've been wanting to look at NFTs. I want to learn more about that kind of stuff in crypto. So I know you have a podcast. We mentioned it at the beginning, right? The WTFinance Podcast. And I'd like to know where people can find you. Do you have a website you could share with us, social media? Let us know everything.
Yeah, thanks, Mike. I really appreciate it. And thank you so much for having me on the podcast. I'm a massive fan of your show, and I think you just make things so simple. And I think that's very important. Like finance, sometimes it can be so complex, especially for I know when I entered, and you probably had the same, there's just all these terms and jargon and stuff, and it's so confusing. So I really appreciate that. But yeah, so for me, I don't have a website yet, but that is the plan. But I mainly have a YouTube channel and sort of other podcast platforms that you can access it, the WT Finance. And if you can believe it, I actually don't have an NFT interview yet. I have lots of crypto. And for me, it is my interest at the moment. It's something I'm very fascinated in. But I love the broadness of finance and how much there is that you can actually learn. So I have real estate, commodities, stocks, macroeconomics, basically everything imaginable, inflation, looking at next market crash, how that works. And yeah, the best places to find me would be on YouTube, on the WT Finance, and I'm also Instagram and Twitter just under my name, Anthony Fatseas. And I'm looking to expand to a website and hopefully have a platform similar to Mike's.
All right. Awesome, man. Hey, and I appreciate the kind words about my show as well. That's why it's called Average Joe's, right? Like, we're trying to make finance and real estate and investing and all of that just simpler for people to understand. It's not that it's complicated stuff. It's just that sometimes when you go and try to look for this stuff and you're trying to learn about it, it can be very overwhelming, which is why I like to bring on guests that have done this. They've come on here and they came, they saw, they conquered, and they're continuing to move up in their business and continue to build their wealth. And that, hey, from where they started to where they are now, like, you can do that too. You're an example too. Look at what you're doing. You started back in 2018 and look at where you're at now, where you're having a podcast talking about this stuff. It's absolutely amazing. Anthony, I know it's Saturday or maybe it's Sunday by you now. I know it's super late because you're in the UK. So I really appreciate you taking the time on this weekend now, the Saturday into Sunday, to have this conversation with me and help me learn a little bit more about NFTs and help my audience learn a little bit more. I think the information you provided was fantastic. And I'll have a link to your podcast and YouTube channel in our show notes to make it easier for people to find you. But hey, man, it's been a pleasure. Thank you for chatting with me today.
Oh, thank you so much for having me. I really appreciate it. And yeah, it's 2 a.m. here, so hopefully I was okay. Hopefully I wasn't putting everyone to sleep.
You need to put yourself to sleep. So you have yourself a good night, and aloha from Hawaii.
Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.